I have my own IB. I have an education firm, so I do a lot of different stuff. I also have I own a seat on the exchange. So my first responsibility to you, first and foremost, is I really got to do a good job and I just really have to scare you really good and tell you the truths about trading. Not a lot of us can do this professionally, and it's kind of hard to do. Only about, it depends on the numbers. I've seen it as low as 5% and as high as 20% of us make money. But I would say 10% of us make most of the money, all right? So I'm going to be going through some hypothetical and simulated performance results, and those have certain limitations, unlike actual performance records. Simulated results do not represent actual trading. So I'm going to show you some hypothetical stuff, okay? So we're going to talk hypothetical for a little bit, and then I'm going to actually show you how I do the actual real trading, and I'm going to show you some trades that I've done with this strategy, okay? So does everybody understand? Like, trading is probably going to end up for you like a bad country song. Your wife's going to leave you. Your kids are going to hate you. Your dog's going to die, and you're going to lose your truck if you got one. Everybody understand? So if you agree that I've done a good job of telling you how trading really is, okay, just give me a yes. Does everybody understand? This for big boys and big girls. We're risking real wealth here, real cash. And, you should never risk more money than you're willing to lose. It should always be discretionary money. Don't be trading your IRA thinking you're going to pay your mortgage, all right? All right, cool. All right, good enough. Now, with that said, my name is Hubert Centers. I am known in the industry for my no BS approach to trading and investing. I'm known as a straight shooter for one of two reasons. Number one is I have tried I've been trading for about 20 years. I've been in the education game for about 12. When I first started in the education game, I founded a company called TradeTheMarkets.com, and I'm actually still a founding member and a shareholder and a partner in Trade the Markets. I just don't post any of my stuff over there anymore because I'm focusing on my personal HubertCenters.com brand right now, way more than anything else. So when we first started up Trade the Markets, I tried to do the prim and proper thing like, you should go long here and you might want to use this stop loss. That freaked me out. I could only do that for about 3 weeks, and I'm like, I've just got to be myself. So what I'm going to do is, if you'll let me, I'm going to talk to you John Carter's group. I don't know if it's John Carter's group. It's Trade the Markets was founded by both John Carter and Hubert Centers. We're both owners of that company. If you'll let me, I'm going to talk to you like we are long lost high school, college, or grade school friends, and you're coming up to me and you're saying, hey, man, I hear you're making a lot of money trading. How do you do that? What is some advice you could give me? So that's how I'm going to talk to you. I'm not going to talk down to you. I'm not going to talk to you like you don't know what you're doing. I'm just going to say, here's what I would do first, okay? So that's the way my presentations go. So this is going to be different, but in a good way. We're going to have fun because there's no sense in making a lot of money if you can't have fun. No one that I know of gets out alive, so you might as well have fun while you're doing this, okay? All right, before we start, did anybody get caught up in the NASDAQ 3-hour flash freeze, okay? Or did anybody get caught up in the CBOE outage over the past 3-4 weeks? Anybody get caught in those trades? Yes. All right, so what we're going to do is, this is actually like a 3-part presentation. I'm going to talk about a little bit of hedging because if you got caught in those things, here's what you should have done. So, and exchanges go down from time to time, so it's really, really important that you have a plan. So if you got caught up in the NASDAQ 3-hour flash freeze, let's say that you were long AAPL. Is that showing up on your screen? So let's say you were long Apple. And when you're long Apple, the NASDAQ decides that they're not going to take any more orders in Apple. So what you would do is, if the NASDAQ futures continue to go up, then you don't have to do anything. You don't have to hedge that, okay? So you're okay. Now, if Apple freezes up on you, if the NASDAQ exchange takes no more stock orders, and you see the NASDAQ futures starting to go lower, then what you would want to do is you'd want to short some NQ futures, some NASDAQ futures. Does that make sense? Because your Apple position would be going down and you would be long and you'd be losing money. Now, exchanges go down from time to time. And today I had a little technical issue, and I have a whole house generator, I have a DSL modem, I have a cable modem, and I have a dual WAN router. So if the cable modem goes down, the DSL kicks in, okay? But we had a little glitch with one of our routers, so they both went down. So I know a lot about like contingency plans, and the exchanges go down from time to time. So you've got to have a good contingency plan, because if you don't, you'll get hosed. If they go down, how do you place an order? So what happened is the NASDAQ exchange went down. The stock market went down, but the futures market stayed up. Yeah, you can call your broker, have a cell phone number, also have a landline. There's key things that you can do. So if the NASDAQ exchange goes down, that just means you can't trade stocks. It does not mean you can't hedge with futures, because this is a CME market and this is a NASDAQ market. So it's two different markets. Okay? So just think about stuff when you get caught in those positions. Usually everyone has a plan until somebody gets hit in the nose, and then your plan just goes out the window. So those are some things that you can do to hedge yourself. All right, we already talked about hedging 101. Okay. If you're long Apple or any other stock and the NASDAQ futures are going up, you don't have to do anything. If you're long Apple and the NASDAQ futures go down, what you want to do is short the NASDAQ to hedge the drop. All right, now, I tried to scare you when I first started with the disclaimer. All right, and I did it because, number one, it's true, and you should always pay attention to disclaimers. But I have a belief that whatever you do in life, you should be able to find a role model, a mentor that should be able to guide you into a position where you'll have a better chance of winning. Okay, so that's my belief. So when I grew up in Eastern Kentucky, I didn't have a whole lot of role models, so I had to actually go out and find really, really successful and wealthy people and have them show me what they were doing. Now, in the process, I have several different businesses that I manage and own. I also trade for a living, and I also teach people how to trade. So there's a lot of different things that I have. I've got a lot of irons in the fire, but I want you to know that even though I tried to scare you earlier, I still think you have a really good shot of doing that. So you know this is not my wife, although my wife does look a little bit like Paula. So this is Paula Abdul, and I advise her on some of her financial and business decisions, and she's actually a real good supporter, and she really believes in what I'm doing here. So she's actually a little shorter than that. She's got 6-inch heels on in this picture of a mastermind that we belong to. So she's a really nice lady. She gets a bad rap because people think she's a little ditzy. She's really, really nice, and she overly trusts people really well. This is me and Richard Branson, okay? And what I did with him is I helped him raise some money for his charitable foundation. It's actually his mother's charitable foundation. So now the only bad thing about this is me and him both suffer from dyslexia. And if you just think about this, hey, Mr. Virgin, right? I don't know who came up with the word, how you spell dyslexia, but if you have dyslexia, you can't really spell dyslexia. It's like a cruel joke. All right, that's right, dyslexia, right? So I also put this up here because I'm kind of on a little bit of a health kick, and I always count my chins here. 1, 2, 3. 3 chins. I might be 4, 3.5, 4 chins. And over here, I'm actually a little bit lighter than this picture here. You'll never see me in these suits unless I'm at the exchange, or if I'm at the Chicago Board of Trade, or if I'm at the Traders Expos, or if I'm on TV like CNBC or Bloomberg or something like that. Right now, I've got a pair of flip-flops, a pair of jeans on, and a T-shirt. And I'm in the Bat Cave. And the Bat Cave is what we call the office here at the house. It's a 1,500 square foot office that has a hidden bookcase door. So it's the bookcase is a door that comes into the office, and there's like wall-to-wall whiteboards on the wall and clocks everywhere and stuff like that. And this is what the office looks like when I'm actually trading. And you can see here that that's 1, 2, 3, this 4, 5, 6 24-inch LCDs. They're just Dell monitors. And then this is the microphone that I'm speaking to you on. And I've got this really cool desk that I can actually hit a button. I don't know if you can hear it in the background. You probably can't because it's kind of silent, where it'll actually hydraulically lift up and down. So I can stand at my desk instead of sitting all day long, because sitting will just kill you. So like I said, once again, I believe you can do this. So don't ever give up on a dream, okay? Now, congratulations. You're in the right place at the right time, and here's why. So now we're going to start getting into the hypotheticals, and I'm going to move as fast as I possibly can. So if you take notes, you can take notes. I am recording this, so if you're not perfect at taking notes, don't worry. I'm recording all of this, and we'll send you out the recording. So we're going to do some quick math based upon just a hypothetical trade, okay? I want one of those with a treadmill under it. Peggy, I actually do have the treadmill right beside me. All I do is flip down the treadmill and hit the start button, and I can usually walk about 2 miles an hour, although I haven't been doing it lately, but that's a great way to trade. So we're going to pretend we're going to do a trade that out of 10 trades, it's only going to work 4 times out of 10, okay? So it's going to have a 41.3% percentage rate, okay? So we're going to have 6 losses. The losses are going to be 6 of those times $156, which is going to total up to $936, okay? Now you may be going, now here's one thing I want to caution you against. A lot of trading educators that don't trade, you guys know the statistics with trading educators, right? You know that on as a general rule of thumb, only about 25% of trading educators actually trade. That's no secret to you, right? Most of you know that. I mean, I'm not telling anything that nobody in here doesn't already know, correct? And most of us don't show real trades, right? So I try my best to always no secret, right? All right, cool. I want to make sure I wasn't outing anyone here. So, would you take a trade? Would you take a trade that only works 6 times or only works 4 times out of 10? It only works 40%, because a lot of people that'll educate you into trading that don't actually trade will like, well, I have a setup that works 98% of the time. Now, that's what we call shit in the industry. There's nobody that has a 98% rate of anything, right? The biggest, most baddest traders in the world have about a 55% and sometimes 60% ratio, okay? Paul Tudor Jones averages on about 55 to 58%, okay? So it all depends upon the return. Now, one of the most common asked questions that you'll get, which is kind of a pet peeve, is like, well, yeah, but what's the percentage rate of this trade? You could have a trade that only works 1 time out of 10, but if the risk-to-reward ratio is really skewed in the reward side, you'd do that trade all day long. Yeah, a lot of people have 98% losses. So now let's say that we had $936 in a loss, and then we had 4 trades that made $1,000 because we're going to risk $156 to potentially make $1,000. That's only going to work 4 times out of 10. So now we're going to have 4,000, right? 4,000 minus 936. Now what's that math come to be? That math is $3,064. Now would you do that trade? The notes are a bit different. The notes trade just a little bit different. They're just subtle differences. We'll talk about that in a minute. So yeah, you'd probably do the trade, right? Would you really do the trade though? Is my real question. Would you really do the trade if you had to go loser, 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 loser? Oh man, what am I doing? Loser, loser. Would you? Because then the next one's probably this, winner, and it erases all these small losses. All right, so that's the first thing we want to go through. Let's say the math is worse. All right. Let's say that you had 7 losing trades out of 10. So it's going to be 7 times 156. This is going to be $1,092. And then you're going to have 3 winning trades, which is going to be $3,000. So somebody do the math here for me. What is 3,000 minus 1092? What is that math? What's it come to? Because I think one of these slides are a bit off. Does anybody know? So somebody whip out a calculator really quick. 3,000 minus 1092. So it's 1908, or is it 208? 1908? Let's go 1908. So you can see, bada bing, 1908. All right. So would you do that trade? Would you still do that trade? Even if it only works 30% of the time, 3 times out of 10. Yeah, you probably would, right? All right. Now, let's go through the 5 stages of trading. So it is my belief that everybody goes through these 5 stages. We don't all go through them like 1, 2, 3, 4, 5. This is one thing that you will never see. If you think that you start out here and this is your route to success, like this right here, you're just delusional. That's not what success looks like in any endeavor that I've ever had success with. This is usually how it starts. You start here, and then you go up here, and then you like this, and then like this, and then you come down here, and it goes like this, and then you end up here. Make sense? That's how success works. I've never seen anybody go like this or like this. I've never seen it before in my life. And I know I'm in masterminds where I'm surrounded by 18 to 20 people, and they're all millionaires, and a couple of them are billionaires, okay? So don't think that by any stretch of the imagination that you're always going to go higher plateau, higher plateau, higher plateau. You're going to be doing this stuff a lot, trying to figure out what's going on, okay? So the 5 stages of trading, according to what I have figured out, is this. So first, you learn how to lose lots and lots and lots of money. Anybody in here done stage 1? It's painful, right? Hardest thing in the world. And then you learn how to lose a little bit of money at stage 2. And then you learn how to tread water. This is the most common stage, because what you'll do is you'll make a little, lose a little. Make a lot, lose a lot. And then stage 4 is where you start making consistent money and cash flow. And then making stage 5 is where you make a killing. And make a killing is, I've got it asterisk because nobody always makes a killing. You always have drawdowns. You always have to adjust. You're always learning something. You're always trying to perfect something, make it a little bit better. You're always trying to squeeze a little bit more juice out of that lemon. So, and making a consistent killing, I don't know if that's $200 a day to you, $2,000, $20,000, or $200,000 in a day. I just don't know what that is for you, okay? So real quick, what stage are you in right now? 1, 2, 3, or 4? I don't have a poll set up for this. Just give me an informal, let me know where you're at. Are you at stage 1, 2, 3, or 4? Lots of 3s. A few 2s. Lots of 3s, yeah. Lots of 3s, a few 4s. Okay. All right, so the number one way that you get from stage 3 to 4 is like this. When you win, when you make money, try to hold on to it longer, okay? That's the number one rule. When you're in a winning trade, hold on to it just a little bit longer, and you'll go from stage 3 to stage 4. That's the number one rule. Now, the problem with that is a lot of people will suffer from what I call style A, which is this. What they'll do is they'll lose a lot of money, and then they'll make a little bit of money, and since they lost so much money, they take their profits really quick. Take it quick. Take it quick. Wow, because it might turn into a loser. Then they'll lose a lot of more money. Then they'll take it quick. Make a little, lose it all again. That's style A. Now, this is how I trade in style B. It has some advantages to it. What I do is I have a big winner followed by a bunch of little losses. And I mean a bunch. I mean, I have all kinds of little losses. Sometimes as deep as a 50% drawdown, and then boom, I get another big winner. And then I start going through another drawdown, okay? And then, boom, another big winner. That's style B. Some of you may suffer from style C, where you lose a lot of money, and then you lose a little bit of money. And then you lose a lot more, and then you lose a little bit more. So, real quick, what style are you? A, B, or C? A, B, or C? A few A's in here. More A's than B's. That's awesome. That means I'm going to be able to help you. Now, I will tell you, I'm only going to be able to help about 70% of you. This style only works for about 70 to 75% of the people, because, about 25% of the traders out there are counter trend traders, and that's not what I am. All right, so now hopefully you don't suffer from style C, because if you are, you're going to be like this little man. You're just going to have red eyes, bloodshot eyes. You're going to be screaming a lot, and you're probably going to be crying some too. So hopefully you don't suffer from C too often. All right, so I'm going to tell you 2 analogies real quick, and then we're going to get straight to trading. I'm going to tell you the pot roast analogy, and then we're going to talk about Aesop's fable. All right. They're both really good trading analogies, so just stick with me. Then we're going to go straight into the trading part of it. Before I get started, what do you trade the most of? Do you trade stocks, options, futures, and Forex? I know you're all candlestick guys because you're in Bigelow's group, right? So I know a ton of you trade with candlesticks, right? So options, stocks, futures, options, futures, stocks. All right, okay. All right, so I kind of know what the group I'm talking to. All right, so here's the analogy on the pot roast. So my wife's name is Lisa, and we're going to use Kelly as the second subject, Kelli. So Kelly's making a pot roast, and she invites Kelly and her husband over for dinner, and Kelly is helping Lisa fix the pot roast, and they have this pot roast, and Lisa, what she does is she cuts the ends off the pot roast, she puts it in this pan, and then she puts some carrots and some potatoes, some salt, some pepper, some butter, some garlic, and then they throw it in the oven. And Kelly's like, I've never seen anybody do that before. Why do you cut the edges off of the pot roast? And she's like, I don't know. That's how my mom taught me how to make it. That's how I make it. So next time Lisa goes over to her mom, she goes, hey, Mom, what's the recipe for the pot roast? And she goes, oh, well, honey, you know what it is. You got carrots, potatoes, salt, pepper, garlic, oregano. You rub a little butter on it. And then she goes, yeah, but why do we cut the ends off of it? She goes, I don't know why we cut the ends off of it. Just that's how Grandma showed me how to make a pot roast. So that's how we make the pot roast. So then they both go over to Grandma's house, right? And they ask Grandma, like, Grandma, we know the pot roast recipe, but why do we cut the ends off of it? And they're like, oh, she's like, oh, you poor thing, you. She's like, back in the day, I only had one size pan, okay, and the pot roasts were bigger than the pan, so I'd have to cut the ends off and put it in the pan before I'd put it in the oven. So that's the same thing that you may suffer from when you get trading education information from people that don't really trade, or that actually do trade, but it's handed down from generation to generation to generation. Does that make sense? You may have, like, before you learned how to really trade with candlesticks, you may have suffered from, oh, that candlestick means this thing, until Steven showed you, like, no, here's the combination. It means this, and it should go higher. Does that make sense? Now let's talk about the second analogy, okay? Let's talk about the second analogy. The second analogy is the story of the scorpion and the frog, okay? So in this example, what you've got is you've got a creek here, and on this side you have the scorpion, and on this side you have the frog. Now the scorpion yells over to the frog and says, hey, frog, swim over here and give me a ride back to the other side. And the frog goes, well, you've lost your mind. You'll just sting me and kill me and eat me. And the scorpion's like, no. There's no food over here. There's nothing. I'm going to die. Over here, that's greener pastures. I've got better hunting grounds. I won't do it. Just give me a ride to the other side, and then I'll let you live. I won't do anything. And plus, if I do that, we'll both die. Why would I do that? And the frog goes, okay, you got a good point. Frog swims over here. Scorpion gets on the frog's back, and as they're swimming across, they get halfway across, and then halfway right here, the frog feels a sting in his back, right? And it's and he looks up at the scorpion and goes, why did you do that? And the scorpion goes, I don't know. I guess it's just in my nature, as they both sink to their death in the little creek, okay? So now here's why I'm telling you that story, okay? The reason I'm telling you that story is, anybody in here trade the E-minis? Anybody in here trade the E-minis where it's run, stop, reverse, run, stop, reverse, run, stop, reverse? Well, if you're losing money trading the E-minis, it's not so much that it's not so much that you suck and you don't know what you're doing. The E-mini's nature is choppy in general. It doesn't really follow through well. So it's in its nature to run, stop, reverse, run, stop, reverse, run, stop, reverse. Make sense? So what we're going to do is we're going to take, you've probably asked people when you first started asking, like, okay, what market should I trade? What's the best market to trade? And if you ask a lot of people, they'll say, all professional traders will trade the S&P 500 because it's the thickest market. And then what'll happen is because it's got the most volume and everybody trades it, and then you'll say, all right, well, I'll give it a shot. And this could be true for any market that you trade. Okay? Then you end up trading them, you get chopped up, and then you start asking yourself the question, like, what am I doing wrong? Why can't I do this? I'm smart, I'm successful. This thing's just too dang hard. It must be rigged. And it's not so much that it's rigged. What is it? Based upon Aesop's fable, what is it? It's not rigged. It's nature. It's its nature to wiggle you out. Okay? So, and it's not their fault. It's not your fault. You've been betrayed. You've been betrayed by, something that's been passed down from generation to generation to generation. It's not your fault. You've been lied to, and you're starting to ask yourself, like, who are they? Who lied to me? Well, they are other traders. They're the media, they're investors, and it's passed down from generation to generation to generation. Did you test what everybody tells you? So what I'm going to do is I'm going to show you two of my favorite trades tonight, and I want you to actually go out and test them, and then I want you to trade them, okay? So I want you to test them first. You can believe everything that I'm saying. That's fine. Most people you can trust, I would say. But you can trust everyone. I just want you to trust but verify. So, true or false, if you can trade any market, do you think, true or false, if you can trade, you should be able to trade any market? Do you believe that to be true? True or false? If you can trade any market. Do you believe that? So, lots of trues, a few falses. A few falses there. All right, cool. So this is my interpretation of that. I would say it's true, but it's a lot easier if you find something that matches your trading style and your trading personality. It's just going to make it easier if you jive with that market. If you don't match your trading style to the right market, it's going to be painful and very frustrating for you. Okay? Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. Now, let's think about this statement. Do you think if you were trading something that you just jived with really good, you just synced up with really well, and you just like, okay, this market is actually pretty easy to trade. If you found a market that matched your personality and style, do you think you could make money quicker? So that's what this slide is about. What's wrong with getting richer quicker? What's wrong with trading something that you're already naturally going to jive with? The only hard thing is it takes years and years and years of experience to figure out like, oh, you know what? You should trade the corn market. Oh, you know what? You should trade bonds. Oh, you know what? You should trade the Aussie dollar. That's going to fit you well. You know what? You should trade gold. You know what? You should trade bonds. You should never trade futures. You should only trade stocks. You have a really good mind for numbers. Options are your game. Okay? You know, there's always a niche for somebody, and you got to find that niche. Okay? So I'm going to talk about how to pick the best market for you to trade. So the first thing you're going to want to do is look at the ATR. And what an ATR stands for is average true range. And this just means how big of a range that the market's going to have. Now, I trade way more futures than I trade anything. But if I thought I could make a market in toothpicks or in Tic Tacs, I would do it. If I thought I could make money and it was moving, I would trade it. Okay? Because I don't really care what I trade, as long as it jives with me. In other words, if I'm in sync with that market and if I know the structure of it and I know the personality of that market, and I'm like, okay, you got to trade this market this way, you got to trade that market this way. So the average true range is the first thing you're looking at, and that's just the daily average range maximum from the high to the low. So the Dow, all these indexes, the Dow, the S&P, the NASDAQ, and the Russell, here are their ranges. 93 points. The multiplier is how much it's going to make you for every time it moves a point, okay? So you're going to make or lose $645 a day. The S&P 500 moves 10 points, $50 multiplier. You're going to make or lose $515 a day, okay? On the NASDAQ, moves 25 points, $20 a point, $518 a day. Russell moves almost 10 points, $100 a point, $990 a day. Now, the only thing that sucks about the indexes is they're hard to trade. Okay, and I actually have a seat on this one, and I was one of the first guys that ever traded the Dow mini futures ever. I've probably traded more Dow futures contracts than most people in the world. I have a seat, and I traded a lot. I mean, I put a lot of hours in on the Dow. The bad thing about all four of these right here, if you don't know it, this is how they trade. Run, stop, reverse. Run, stop, reverse. Run, stop, reverse. Oh, heads up, I'm going to break out. Ah, psych, gotcha. Run, stop, reverse. Run, stop, reverse. Oh, I'm going to break down. Ah, psych, gotcha. Does everybody understand? Now, let's talk about the 30-year bond. 30-year bond moves a point and 1.5 a day, okay? Typical trending days. Yeah. The index futures don't really trend that well, although lately they've been doing decent. The bonds are going to move about a point, 1.15 a day. They're worth $1,000 a point. You're going to make or lose $1,150 a day. The good thing about the bond market is they go like this. They go up, 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 retrace just a little. Up, 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 retrace just a little. Up, 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 retrace just a little. Up, up, up. So it's an easier market to trade, okay? The only problem is a lot of people don't trade bonds because they don't know how to trade them. And they think they're boring, but they're very, very methodical market, and in my opinion, one of the best markets you can trade. Now, crude oil is bipolar. It's a little crazy. It's like I've actually been married for 21 years to my wife. I've never been divorced, but people tell me it's like an ex-wife or an ex-husband or a crazy boyfriend or a crazy ex-girlfriend or ex-boyfriend. It's bipolar. Moves about 1.8 points a day. It's $1,000 a point. You could make or lose $1,830. It's hard to trade. It's a hard nut to crack because it'll go like this. It'll go run, stop, reverse, breakout. Run, stop, reverse, breakout to the downside. So it's hard to trade. Also, silver is a no-no. It is the widowmaker. It'll move about a half a point a day. It's worth $5,000 a point, and you can make or lose $3,000 in a day. Gold's actually a really good trader. As soon as it breaks below 1,300 or above 1,380, it does this. What it does is it goes, hold on here. I've got Skype on here. Let me kill Skype here really quick so you guys don't have to see any of these weird Skype things going on. There you go. And pop. Now we're back. All right, so the way gold trades is gold trades like this. Gold trades where it goes like this right here. It will, hold on. I didn't have my pen ready. Gold trades like this. It'll break out, consolidate, break out, consolidate, break out, and consolidate. Okay? Boring I can live with, right? I know I can live with it too. And it's really good because you can make or lose $1,800 in a day. Aussie dollar trends pretty well. It's plus or minus 730. Euro currency plus or minus 1100. If you're going to trade the E-minis, what I would try to get you to do is skip the E-minis and go straight to the Aussie dollar or the euro. You'll probably make more money. You can do it in currency futures or you can do it in the spot Forex market. So based upon this, what we're going to do is I'm going to recommend that you trade the 30-year bond. Who in here has never traded a bond market a day in their life? Okay? Who's never traded a bond market? I mean, a lot, right? So this is funny because I do this presentation a lot. Why don't you trade bonds? Is it because you just don't know they're available? Do they scare you? Or is it just because you don't know about the bond market? Like, give me some, have no idea, okay? Just tell me why you've never traded. Don't know about them. All right. Fair. Ignorance, okay? Don't know about them. Don't understand them. Ignorance, no idea. Never consider them. Don't know them. All right. Not familiar with them. Didn't think you could make money consistently. Oh, awesome. Not enough experience. So if you'll allow me to, because it'll probably go a little bit longer, but if you will allow me, I'll give you like a bond trading 101 class. Oh, and Monty, if you've never traded futures, how many of you have never in here traded a future contract before? How many of you never traded a future? All right, so first, let's talk about that, okay? So all the bond market is a future, okay? That's all bonds are. They're nothing crazy. It's just a future. If you've traded, usually most people start out with stocks, then they go options, then they go futures, then they go Forex. I've landed in the futures market just because I love futures so much, okay? So if you can trade a stock, you can trade a future, all right? It requires less money, they're more leveraged, and they're just cleaner, in my opinion. So all the bond market is a futures market. Now, I'm going to mainly teach you how to trade the 30-year bond tonight, okay? 30-year bond. There's also a 10-year note, there's a 5-year note, and a 2-year note, but I'm not really going to talk about those. So if you guys will all give me permission, I may actually go a little bit later, but what I'll do is I'll give you a really good foundational education on how to trade the bond market. Like, we'll go over bond trading 101. You'll feel confident when you leave here, and I'll throw a bond trade on in front of you. Is everybody cool with that? Fine, go for it. All right, okay, all right, cool. All right, so let's get started. So this is what's going to teach you how to hold a winner for a very long period of time, okay? Or you're going to hold a winner a little longer than you normally would, okay? So remember, we're not going to talk about sprinters. We're going to talk about marathon runners. So this is the E-minis. Run, stop, reverse, run, stop, reverse, run, stop, reverse. This is the bond market. Goes up 18 ticks, pulls back 8. Goes up 12 ticks, pulls back 8, and continues. So which one do you think is going to be easier to trade, A or B? Which one? Define long, like a day. A long trade for me in a lot of cases is a day. So B is going to be easier to trade for most of you. All right, cool. So we've already covered that. So I'm going to skip just a few slides. I'm going to try to get right to the meat for you. Okay. All right, bond trading basics, all right? So first we're going to go over the months of the year that they trade. We're going to talk about the time that they open and close. We're going to talk about cautionary periods of time. We're going to talk about the symbols so you know how they actually work. And then I'm going to talk about the tick values. And then I'm going to show you what they look like on Dome. And then I'm going to talk about the margins. And then I'm not going to teach you the first hour trade. What I'm going to teach you is the overnight 8, 12, and 16 tick reversal, the intraday 8, 12, and 16 tick reversal, and then I'm also going to teach you a trade called the sneak attack, all right? So those are the two trades that I'm going to teach you, okay? So before we get started, we got to have a little conversation about how futures work. So I don't know who came up with this schematic, but they really need to torture him if that is possible, because it's borderline insanity. So the delivery months on futures are this. January is F, because that just makes total sense. Why would you start January with F? It should be A. February G, March is H, April is J, May is K, because there's a K somewhere in the alphabet. June is M, because May was before, and June's got to be M because May came before it, I guess. July is N because there's an N in June, I guess. August is Q because there's no Q anywhere in the months. And September is U, and October is V because there's no V anywhere. And there's a V in November, so maybe that's why. And November is X, and December is Z. Anybody confused? I hate this. I hate when I have to go through this. Fall, first month there. G, second month maybe, right? So every contract, if you're trading futures, like the index futures, what they do is they trade March, June, Sep, and Dec. So do the bonds. So if you've traded the E-minis, you already know how to trade bonds. So somebody has to be doing something, typing with it. I know, right? It's kind of weird. So this is how the futures markets work. If you've never traded a futures market, here's how they work. So for the bond months, it's going to be the same thing as the ES. So how many of you here have traded the Dow, the S&P, the NASDAQ, and the Russell? Anybody in here traded it? Okay, so you're already a step ahead. You already know how to trade the bonds then, because it trades the exact same months. So for those of you that have never traded futures, here's how futures work. Because there's a lot of options guys in here. Pretend that you were going to do an options and it was going to be delivered out 3 months. Or you were going to hold a stock, but you could only hold it for 3 months. Is the E-mini for the bonds? No, there's not an E-mini for the bonds, but there is a futures market for the bonds. But I'll show you the different contracts you can trade. So remember, it's H for March, M for June, U for Sep, and Z for December. So in March, what we do is we start in March. Right now we're trading the December contract. We're trading USZ13. US is the contract symbol, Z is the month, and 13 is the year. Now we started trading December in the second week in September. Okay? When we got to the second week in December, we rolled the contract to the December contract. Okay? So what we do is in December, the second week in December, we're going to start trading the March contract. It's September. Why do we trade December? Because the September contract rolls into the December contract the second week in September. Okay? Now, in the second week in March, we're going to roll out of March and into June, and we're going to trade that all the way until the second week in June. You got it? Now, some different brokers will use ZB, and Toss will use /ZB, and some people will do other symbols. But does that make sense to you, that if you've never traded a futures contract ever in your life? So I'm going to go over it one more time. So right now we're past the second week in December or September, so now we're trading the December contract. Now, when we hit the second week in December, we'll start trading the March contract. The second week in March, we'll start trading the June contract. Make sense? Don't overcomplicate it. Just know that in the second week of March, we're going to start trading June. Second week in June, we're going to start trading September. Second week in September, we're going to start trading December. So it's good for about 3 months. It's max you can hold them. And don't let the brokers lie to you and say, well, you can just roll the contract. That's BS. You can't roll it. You get out of your original position. You have to roll, and you have to initiate another position. You're not rolling anything. You're getting out of your original one. All right, so that's how the bond market and the futures market works. That's usually how the roll works. So here, this is the 30-year bond. This is the 5-year. This is the 10-year note. This is the 5-year note, and this is the 2-year note. Now, here's the cool thing is, you don't really have to know fundamentals in order to trade the bonds, but let's just use one fundamental. Anybody in here own one of these? This is my rendition of a house with smoke coming out the chimney. All right, so most people in here own homes. What kind of mortgage? Do you have a mortgage on your home? In the U.S., standard is either 30-year or 15-year, right? If you have a mortgage on your house, right, Do you think your mortgage rate is going to rise? Is it going to rise over time? Or do you think it's going to fall over time? Based upon where it's at right now. You think the interest rates are going to stay here forever? No, you don't, because you're smart and you know it's not going to. All right, so if the interest rate on your mortgage is going to rise, this is what's going to happen to the 30-year bond. That right there. It has to. It has no other choice other than to do that. Now, there's obviously going to be gyrations in that rate, right? So when the Fed decided they weren't going to taper, the bond market went up. Okay? So that's all you need to know in order to trade the bond market. So now let's talk about the tactics. All right, we know the strategy. Now let's go through the tactics. The bond market opens up at 6 p.m. and closes at 5 p.m. Is that 1 hour a day that it trades or 23 hours? 1 hour or 23 hours? 23 hours. Now, this is the craziest thing in the world. How would you like to be able to hold something for 23 hours and pay intraday margins? If I could show you a way to do that, would that be worth your information? So open outcry is where the dinosaurs live, and it's at 8:20 in the morning till 3 o'clock. There's still pit traders down there. It used to be the biggest pit in the world, and now there's about 8 to 12 guys down there, and that's it. Okay? So that's when the pit opens. Now, this is what a book looks like. This is at US. This is TradeStation. You can see this is the 30-year Treasury note. It opens up at 6. It closes at 5. It's worth $1,000 a point. Here, all right, no, now pay attention. If you're looking anywhere else, pay attention because this is serious right now. If you miss this out, you're going to be screwed later on in the presentation. The bond market trades in 1/30 seconds. Fractions. Oh God, I'm dyslexic and I suck at math, and I can still do this. So don't go anywhere. It goes from 1/30 second to 2/30 seconds. If you go from 1/30 second to 2/30 seconds, you're going to make or lose $31.25. Does that make sense? Now, I've got another slide that'll visually represent this a little bit better. The 10-year note trades in 1/64th, and each tick will be $15.63. So let's go to this next slide. So these are really, really important things. What you have to do, you have to know when the interest rate changes from the FOMC, because the market will wiggle around on FOMC day, all right? Any other major economic newses, I would follow. If you have a red star or a orange star on a kind of day, pay attention, okay, because they're usually market movers. And that'll wiggle the bond market around. Tick values. These are the tick values. 30-year bond is every tick is $31.25. 10-year note is $15. 5-year note is $7.81. 2-year note is $15.62. Now, the 10-year note is probably got 4 times the volume that the 30-year bond has, but I prefer to trade the 30-year bond. They trade really, really closely. How did you say they go? 132, 230 seconds is? It's worth $31.25. So this slide here this is what it looks like in TradeStation and Infinity. So for TradeStation, it's going to be USH13. This means this is US. The H means it's March, and 13 means it's the year. So US is the symbol. The circle is the month, okay? And then obviously the 13 is the year. All right. For Infinity, ZB is the symbol. This is the month. And that's the year. Okay? Can you show it in TOS? TOS, just do this, / ZB. That'll do it for you in TOS. That'll do you. That'll do you right. Has everybody got that? Now remember, I'm recording this, so I'll send it out to you later. All right, now this is probably the best slide in the entire presentation to explain to you how the bonds work. Okay? I don't know what it is in OEC. I don't trade through OEC, sorry. So we're going to pretend that you are long at 135. Do you see this right here? We're going to pretend you are long at 135. Everybody give me a yes in the chat box so we can all follow together here. We're going to pretend that just by luck, skill, or you're just good, right? So at 135, you decided to get long the bond market, okay? When it goes from 135 to 135 and 130 seconds, in other words, when it goes from here to here, quit. When it goes from there to there, how much money did you make? From 135 to 135 and 130 seconds, how much cash did you make if you're long? $31.25. Now, if you were short and it went up, what would you do? You'd be losing money, right? Now, if it goes from 135 to 135 and 2/30 seconds, 2 ticks, how much money would you make? 62.50, right? All right. Okay. Now, so we're going to, now, does anybody remember what the average true range, what was the average true range of the bond market? It was 1.15. So you got a good shot of making a point here, right? A decent shot, right? So if you go from 135 all the way up here to 135 and 30 seconds, and then you go 135 and 30 seconds, and then when you get to 135 and then you go 30 seconds, well, that means it's 136, right? How much money do you make or lose from 135 to 136? Even grand. Does everybody understand how the bond market works now? This is the frustrating thing about futures, because every futures contract is different. So if you don't know this stuff, you'll be like, I don't even know, how much is a tick worth? And then you get in it and you go, whoa, that's a lot. That's moving. And you may get in a bond market and go, man, this market's not moving. And you go out to lunch and you come back, whoa, I'm up $700. That's nice. All right, so that's how it works. That's how the bond market works. Anybody got a question on this slide before I move on? Because now we're going to talk about how you trade this bad boy. No questions. Awesome. All right. So this is what they look like on TradeStation. They do them in, and we can buy many contracts. You can buy as many contracts as you can afford. They'll sell them to you all day long. And you can get in and out in half a second. In TradeStation, they plot them in 130 second and 130 second, 132 and 230 seconds, 132 and 330 seconds. On some brokerages like Infinity, they'll quote them at 133.12. That just means 133 and 1230 seconds, or 113 and 32 or 1330 seconds, 133 and 1430 seconds. Makes sense? Pretty standard stuff. All right, margin and intraday. Intraday margins from most brokerage firms are going to be anywhere from 300 to 1,000. You can get it usually around $500. Call your broker, because you can get very inexpensive rates intraday wise. Okay. Overnight margin on the 30-year, which is when I trade a little bit, it's a little high. It's $3,000 if you're going to hold overnight. Now, this is a very important strategy that you have to wrap your head around. On the bond market, if you initiate a trade at 9:30 and you hold it, so here's the thing, the bond market opens up at 6 p.m. and then closes at 5 p.m. Okay, so remember this. If you open up a trade at 9 a.m. and you hold it until 4:50 p.m., is that an overnight trade or an intraday trade for margin purposes? That you have to put a down payment of like $500, $300, $1,000 down. Intraday, right? So if you initiate a trade at 9:30 and you hold it until 5:10, is that an overnight trade or intraday? That's overnight, right? Now, if you initiate a trade at 6:10 p.m. tonight and you hold it all the way until tomorrow at 4:50, is this an overnight trade or is this an intraday trade? This one right here. Which one is it? That's right. It's intraday. Most brokerage firms, it's intraday. Not all, but most. So now, see, you can be in that trade for 23 hours with intraday margin, holding overnight. And now you give yourself the opportunity to catch most of that wave. So now let's talk about how we do that. Okay? Here's how we do this. What you're going to do is the bond markets, anytime they're trending, if they trend down, they're going to bounce up 8 ticks, they're going to bounce up 12 ticks, or they're going to bounce up 16 ticks, and then they're going to continue on their trending direction, okay? So I use an 8 tick or a 16 tick. I usually don't do the 12 tick, but look, I'm not a trading god. I'm not a guru. I'm just a dude that trades, all right? So I use the 8 and the 16. A lot of people will use the 12 and the 16 or the 8 and 12. Pick your favorite two. Mine is the 8 and 16. Now, here's what you're going to do, okay? And you're going to have these slides, so don't worry about it. What you're going to do is you're going to look for a high and a low. You're going to see what the daily trend is, And you can either do this in the day session or you can do it on Globex. You're going to do it on the 30-year. You're going to do an 8, a 12, or a 16 tick reversal. I'm going to teach you the 8 tonight. And here's how it goes. Now we're getting into the meat. Remember the math. It's only going to work about 3 or 4 times out of 10. All right, so here we go. Does anybody know what this right here is called? At point 1, where I shorted here and I covered here. Anybody know what it is? This is called a loss of $156.25, where I donated money to the market. Okay, so this is called a loser. Okay, anybody know what this is called? Where I short here and I cover here. Anybody? Take a guess. Anyone? No, it's a loser. It's another loss of $156.25. Loser. Now, here at 6 o'clock, okay, so I donated 2 trades to the market intraday, and then here at 6 p.m., which is this yellow hash line, the market opens up, it dives lower, and I had this day as going down on a daily trend, so I want to short any bounce. So then when the market bounces down here, when it sells off and bounces off this low, I let it retrace up 8 more ticks. I short it there. I use a 5-tick stop loss and a 32-tick target. So I shorted it right here. I risked $156.25, and then I held it for $1,000. Anybody know what this is called? This is called revenge. Not really. It's called a winning trade is all this. Anybody in here ever revenge trade? Now, the coolest thing about this is, why do you think this trade worked? It's not because I know what I'm doing. I'd tell you that right now. Anybody want to know why it probably worked? What were the odds of me jumping out of this thing in the middle of the night? It's trending very well. And then I put this trade on at, pretty close to midnight, right? And I'm sleeping the entire time that this trade is working. And then I get into the office and I go, oh, look at there. I'll be daggone, making some money. It's right. It worked because I missed the chance to be a little girl and jump out of the trade. That's why it works. Exactly. I didn't have to say like, oh, I'm up 300. Oh, I'm up 30,000. Oh, I'm up 300,000. Jump out. So that's why the trade works. So the first thing you want to do is you want to look at the daily trend, okay? This is a trend line of the 30-year bond. It broke right here, and then after that, we had it pegged as going lower, so we've been shorting the bonds. Here it is. So we have the daily trend pegged as going lower. At 6 o'clock, I'll wait for it to open up, and then I go, okay. Now, usually I'm taking the kids to like jiu-jitsu practice, gymnastics, cheer, soccer, all that other stuff, so I'm usually not here right at 6 sometimes. The market sells off again. It bottoms out. It bounces up 8 ticks. I short it with a pending order, 32-tick target. Shorted it on an 8-tick bounce. Got it? This is what it looks like again. The market opens up. It sells off. It bottoms at 146 and 4/30 seconds. It bounces up to 146 and 12/30 seconds. How many ticks is that? 4 minus 12 is what? 4 minus 12 is what? 8 in most countries. I'm using a 5-tick stop loss right here. Yes, I always have stops. I always use stops. I short it. I have a 32-tick target. There's the target. Do you have a sell stop at a plus 1,000? I do, Wayne. I sure do. 8 out of 20 work. 8 out of 20 work monthly, or what kind of runouts? It works. It works a lot, Rick. I've got it pegged at 38 to 42%. So here's what that trade looked like, and then in the morning I started trailing my stop down because I originally risked $156.25. So then what I did is I started trailing my stop in, locking a little profit in. Now the key thing is don't trail your stop down like right here because it'll just go boop, boop, and stop you out. It's going to wiggle a little bit. And then in the very next tick, we got our $1,000, okay? So it has the 2 thumbs up seal of approval, all right? That's the last trade. So let's talk about, before I get to the sneak attack, any questions on the overnight 8-tick reversal or the intraday 8-tick reversal? Anybody got any questions on it? Hopefully I've described it fairly clearly. How many ticks do you trail? I would use a 5-minute parabolic SAR for a trailing. Why pick 2 of the 8 and the 12? Great question. If it retraces 8 ticks, let's say it was selling off and it retraces 8 ticks, and then you're using a 5-tick stop loss, what's 8 plus 5? What does that come out to be? What's 8 plus 5? 13, so you ain't going to be able to do the 12, right? So you're either going to have to do the 8 and the 16. See what I'm saying? Or I guess you could go right back at it, but I wouldn't recommend that. So I prefer to do the 8 and the 12-tick bounce. What size bars were on the chart? It doesn't really matter because I do it on dome or a 1-minute chart. All right, so the sneak attack. I'm going to cover this next. I'm going to go ahead and put it on the slide here. Do you have to manually close the stop loss or do you use an OCO? I use OCOs and OSOs, so I never even have to touch it. And I'll do the order before we get out of here. I'll do a live order for you, and I'll show you how it works. I'll do it on my trading platform, and if I get filled, I get filled, and if I don't get filled, I don't get filled. All right, so that's the first trade. Let's talk about my second favorite bond trade. Looks like you should have been stopped. Looks like it should have been stopped, but I wasn't because I didn't trail the stop that night. I just left it open. You said 8 and 12, but circled 8 and 16. No, you can do an 8, a 12, and a 16-tick reversal. I do the 8 and the 16. I hardly ever do the 12. So no stop. No. Listen, I always use a stop. It's a 5-tick stop loss. And then I go to bed, and it's a 32-tick target. There's always a stop. If you trade with stops, you will lose a lot of money. So always use stops. All right. So what do you have the market? So this is the hypothetical. Let's do the hypothetical. If we have, why pick the 8 or the 16-tick? Because it's the remember the discussion we had about the nature of the market. Well, the bond market will do this. It'll go down, 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 and it has a tendency to retrace 8 ticks and then continue lower, or it'll go down, 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 retrace 12 ticks and then go lower, or it'll go down, 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 retrace 16 ticks and then go lower. That's why, because that's the bond market nature. It's a very methodical market. And what it'll do is it'll go up, 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 back to, up, 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 back to, up. That's why we're doing that, because it's the nature of that market, okay? So in this thing, which way would you say bonds are going? So this is a trend line, and we broke the trend line right here on the daily chart. Do you have this thing pegged as going up or down? So since we broke here, we're probably in a daily downtrend, okay? So you always want to go in the direction of the daily trend. If you violate that rule, you will lose money. Okay? What determines the trend? The daily chart. All right. Now this is called the sneak attack trade. The sneak attack trade. So we're going to sneak in there before the pit guys get in there. So what we're going to do is that now here you got to remember this. 17 ticks or greater, you can't do this trade. 17 ticks or less, you can do the trade. Everybody in here say 17 ticks. Type in 17 ticks in the chat box real quick. All right. If the first hour of this trade is 17 ticks or less, you can do this trade. If it's 17 ticks or more, don't do this trade because it won't work very well. So what you're going to do is you're going to start looking at the range from 720 to 820, and you're going to mark the high and the low from 720 to 820 East Coast time. Is 17 okay? Yeah, 17's okay as long as it's 17 or less. It just can't be greater than 17. All right? So from 720 to 820, you're going to calculate that range of the 30-year bond. So in this case, we went from 145 and 21 30 seconds to 145 and 31 30 seconds. So we subtract that, and we come up with 31 minus 21 equals what? Do it in your head. 31 minus 21. There you go, 10 ticks. So that's our range. Does everybody see that? Now, type this. Say range equals target. Range equals target, really quick. Range equals target. Range equals target. Range equals target. Range equals target. Nice. Now, what we're going to do is we're just going to do a bond breakout bracket trade. If it goes lower, if it breaks the low of that range, we're going to go short. If it breaks the high, we're going to go long. But we're not going to go long. Why are we not going to go long? Because the daily trend is what? What's the daily trend? How we got the bonds pegged? Which way we think they're going? Down. So why would we go long? The only reason you go long is if you hate money. Do you hate money? Right? Now, I'm joking, obviously, but what we want to do is stay on the daily side of the trend. So here we have a breakout, so it goes, okay, go long. No. I'm not falling for that. No way, no how. What I'm going to do is I'm going to wait till you break down to the low side. I'm going to short you when you break that range. I'm going to use a 5-tick stop. And what's my target? What's my target? What was my target? No, not 32. 10. Your calculation from your range is your target. So you're going to risk 5 ticks to make 10 ticks. Got it? Now this is an intraday trade. So what I've tried to do is I tried to show you 2 intraday trades and 1 overnight trade. The 8-tick reversal will work intraday and overnight. This trade here is the sneak attack trade. It only works from 7:20 to 8:20. So I'm going to go over it one more time. So from 7:20 to 8:20, you draw your range. There's your high. Here's your low. We come up with 10 ticks. Remember, the range equals the target. We know it's in a downtrend. When we break below our low here of 145 and 21 30 seconds, we're going to short it at 145 and 20 30 seconds. We're going to put a 5-tick stop loss, 5 ticks above where we entered, and then our target down here is going to be 10 ticks. You got it? Does everybody understand? Sweet little trade. Now, I build indicators because I like building indicators because it makes my life easier. So what I do is I have indicators built to where I can put them on the chart and it'll go, okay, Hubert, it'll say you should be long here, get long right here. This is your stop loss, and then this is your target. So it makes my life easier. I also have one for the 8, 12, and 16 tick reversal that I'll show you in just a second. What is the percentage? Oh, Wayne, you asked the evil question. What is the percent win on this trade? It works about 3 to 4 times out of 10. Okay, you've got to have good money management. You've got to have good entries. You got to have good exits. If you line all 3 of those up, then your profits and your confidence are going to increase. Okay, now you got to have some good setups, and a good setup executed will beat the pants off of a perfect setup that goes unexecuted. Good is good enough. Don't try to filter out all the losers or stop outs. That is a sucker's and a fool's game. Enjoy the process. Work through it. You're going to have some wins and you're going to have some losses. Okay. So what I want to do next is I want to make you a special offer. Okay. So Steven came into my room last night and he made my people a special offer, and I wanted to come over here and make you a good offer too. So here's what you're going to get. I've got a course that goes through stocks, futures, Forex, gold, and bonds, and they're all my favorite trades, okay? My favorite trades. And so if you go to hubertcenters.com/learn, what I'll do is I'll let you have 2 courses for the price of 1, okay? My favorite trade setups I usually sell for $197, and cloud charting secrets. Does anybody in here use Ichimoku? I have the number 1 best-selling course on Ichimoku, cloud charts. And if you're a candlestick fan, you got to have Ichimoku. It's just awesome, okay? So they both retail for $197. But I'm going to let you have them for $97, okay? It's only for the first 100 people. After 100 people order, I'm going to shut it down, okay? The first 100 people, you can also call my office. I actually have people right behind me that'll take your orders because we have a live staff here. So if you go to hubertcenters.com/learn, here it is. And then you can actually call a telephone number too, and they'll talk to you. Now, before you go, we're going to do some live bond trading here, all right? So I'm going to answer all your questions before you go. I'm going to answer every one of your questions. You can also call my office at area code 859. I can hear the phone ringing. 859-963-3445. Area code 859-963-3445. So let's talk about really quickly what's in the course, and then I'm going to answer all your questions, okay? Let's see here if I can get the slides to advance. All right, so here's what it's going to look like when you go to the order page. You're just going to hit the Add to Cart button, and then this is the link to all these videos. So you're going to all these videos: Part 1, Part 2, Part 3, Part 4, Part 5, Part 6, Part 7, and then I did live trading here, and I also did live trading here, and I recorded it. And then here's the Ichimoku slides, and then here are the low risk, high reward trade setups. So you have 100% satisfaction guaranteed, no questions asked whatsoever. Ichimoku is available on most charting packages, so I don't have to sell you an indicator. It's on almost every charting package out there worth its salt. If you don't love the course, you don't have to keep it, and I don't want your money. I always over-deliver, period. I usually try to give you 10 times. Is this a membership or one-time charge? One-time charge. Only $97 one-time fee. And like I said, you're going to be getting 10 times the value. Here's a couple reviews. I had a great day. I made $1,980 on shorting the bonds and gold. I was up $350 on 3 contracts on the YM FOMC trade. I held it a little bit too long and I gave some of it back. I just wanted to say, as usual, you lived up to your word and way more than over-delivered on the course. I took your Technical Analysis 101, I took your Ichimoku course, and your Favorite Trades course. Again, many thanks for your time and effort. So here's what I'm going to share with you, and I'm going to have, there's 5 different modules, plus a bonus Ichimoku charts module, okay? Here's what's in the courses. So on the stocks, I'm going to teach you the favorite ways to scan for the market, for intraday and swing trades in the stock market, the best way to scan the markets for trades, and how to filter through the best trades to take, okay? Why futures contracts do you show? What futures contracts? I show the Dow E-mini, I show crude oil, I show corn, I also show gold, and I show bonds. On Module 2, we're going to talk about the 7 horseman trades. There's actually 7 stocks that beat earnings 90% of the time. And then there's another 7 stocks that beat earnings 80% of the time. We're going to talk about stock gap plays, and we're going to talk about gap and go plays. We're also going to talk about earnings plays. So that's in the stock module. These are all my favorite trades. And then in Module 3, I'm going to show you how to trade gaps on index futures, specifically the YM and the ES. Those are the ones I trade the most. I actually trade the YM the most. The ambush trade, which is a 50% retracement. The fade trade, 85-115. Great little trade. And the crescendo trade setup, which is kind of like having tomorrow's newspaper today. So the best thing about this trade is anytime you see the trend reading close above 1.5, it has like a really high chance of gapping up the next day. And it's a great trade to know if the market's going to gap up the next day. So it's a wonderful, wonderful trade to actually have underneath your belt. Now, I trade more gold and bonds than anybody out there. All right, the phone number is area code 859-963-3445. Area code 859-963-3445. I'm going to teach you the famous Goodnight Gold trade where I risk $600 to make $6,000, okay? It's a great trade to have. We're going to talk about the gold rush trade and the gold bug trade, my favorite gold trades. And then I already taught you these 2 trades, so you already have these as my bonus to you. You've already got them in this webinar. The overnight bond trade, that was that 8-tick reversal. The sneak attack trade, you already got that tonight, okay? And then there's an Ichimoku course. It's explained and in action. Here's the order form. Now what I want to show you is I want to go through really quickly, if you don't care, before I answer questions, I want to show you some of the slides on Ichimoku, okay? Because it's how much capital is required to trade futures. You can do it with as little as $2,000. Is the course online? As soon as you hit the order button, you'll get instant access to the course. It is online. You can view it at any time. You'll have access to it forever, as long as I'm alive or as long as you're alive. So this is what the slides look like on the Ichimoku course, all right? I'm going to show you just some of these. This is just a bonus of the course. So we're going to go over what's the turning line, what's the standard line, okay? I'm going to show you how all the formulas are calculated on Ichimoku Cloud Charting Secrets. You're going to know exactly how they come up with the formulas, what they're used for, when to enter, all right? In Japanese, Ichimoku Cloud Charting Secrets stands for at a glance, and it looks confusing at first, but what I do is I break it down in a systematic fashion for you, and we go point by point, and we methodically go over what each thing means. And then what I do is I show you the best settings to use, all right, and the best trades for consecutive, conservative trade setups. And I'll show you one slide that'll kind of blow your mind here real quickly. So, and we'll talk about this a little. We'll talk about the bullish signals on Ichimoku. This is just the slides from Ichimoku, just the bonus. So if you're a candlestick fan, you got to have this course. Can you use Ichimoku on stocks? Oh, Lord, yes, yes. So if you use Ichimoku, back-tested the last 5 years, you would have had a 33% return if you take every signal. If you only do the signals in the direction of the daily trend, you got a 79% return if you take out those counter trend signals. So that's pretty impressive. Now, the wild thing, you got to use this setting, daily, hourly, 10-minute in order to get that. And then it's profitable on 29 currencies over the past 10 years using those settings. And then you're going to get this little cheat sheet that shows you, like, if you get an hourly signal, then it's good for 3 days. If you get a 5 or a 10-minute signal, it's going to be good for 2 to 4 hours, okay? And this, like I said, this is just the bonus. This is the Ichimoku bonus, and I'm going to be going all over these slides with you, all right? And there, right now, I'm on slide 118, and there's 180 slides, and I show you how to trail stops on candlestick charts, and we show you how to enter everything on the actual charts for the trade. So it's a very detailed strategy with Ichimoku. I'm a huge fan of Ichimoku. So now what I'm going to do really quickly is I'm going to go back to the order slide, and I'm going to park it there. I'm going to let you order, and then I'm going to answer all your questions until I answer every single question, and then I'm going to do a live trade in front of you. So hit me with your questions. Is the course online? Yes, it is. If you had to recommend to focus only on one and get a real good stock E-mini gold bond or Ichimoku, if I had to recommend to focus on one to get really good at, would it be stocks, E-mini golds, or bonds? I would start you out in bonds first, Gary. Would you please go over how to trail the bond trade again? I missed it. Randy, I will do that. Let's do this. I'll do that in the live section at the end of it. Does that sound good? Are you short tonight? I don't have an order in yet, but I'm about to have one. How long are the videos? So it's about... Hey, Jared, how long are the videos? How many hours of video is the content?
Hang on 1 second, Eric. It was supposed to be 3 hours. It turned into about 7 hours.
Okay, Jared said it was supposed to be a 3-hour course, but I turned it into 7 hours of material. So it's about 7 hours of video.
And it turned into about a 7-hour course.
Ichimoku is great stuff. Great stuff, yeah. Are you still doing some mentoring? I am, yep, I'm still doing some mentoring. I've got another class, I think, next month. There's already 2 spots filled up. About an hour each, I would say, Gary, yeah. If you trade bonds, are you always trading at night? No, I trade the overnight session, and I also trade the intraday session too, Gary. I do both. In a down bond market, the bounces are 8, 12, and 16 ticks. What about in an up? Same thing. They reverse. It's a bond reversal trade. So if they're going up, they're going to pull back 18, 12, or 16 ticks and probably continue. If they're going down, they're going to bounce 18 and then continue. What are the contract details for the 30-year bond? This is par amount and nominal interest rate. What? Ooh, that's a par amount and nominal interest rate. You got me there, MG. What are the contract details for the 30-year bond? The contract details, call your individual broker because the exchange sets those, but the brokers can go above those limits. What about the trading room offer? I work full-time and may not be able to attend. On the trading room, when you buy the course, we make you an offer to do a $7 30-day trial. If you want to, you can try out our trading room and our membership site where I give you trading videos every day, and I give you recommendations on trades that I'm taking, and then we also have a live trading room. You don't have to take it, though. It's just it's an option. Will the videos play on an iPad? LG, I believe they will because they're HTML5, so they should. Do you feel bonds are really easier to trade than stocks? Yes, I do, Vincent. Yes, I do. I really like the bond market. My two favorite markets right now are bonds and gold. But now I trade a lot of stocks and I trade a lot of other futures. But what I try to do is I try to go where the easy money is at, like the low-hanging fruit. So the bonds have been really, really good to me for quite some time. So, yeah, I really enjoy them. Hubert Rocks have done another of his courses. Thank you, Alan. I appreciate it so much. Hey, just out of curiosity, has anybody in here already taken either Low Risk, High Rewards, Ichimoku Secrets, or My Favorite Trade? Does anybody in here have them already? Yes. And if you don't mind, what did you think about them? Were they good? Did they suck? Is it worth the cash? Now, this is dangerous, right? Because I have no idea what people are going to say. Ichimoku, and I loved it. Thank you. Favorite trades? Great. Yes, I have. Cool. Thank you. And you can give your honest opinion. Yes, I would, and I'd recommend it highly. Thank you, Richard. I appreciate it. I don't, but I haven't watched. I do, but I haven't watched them yet. David, you got to watch them. Love them all. Ichimoku is fantastic. Thank you, Vincent. I appreciate it. As interest rates start to gradually go up, will bonds still be your favorite? Yeah. Because they'll get annihilated, Gary, to the downside. They'll just implode and go much, much lower. Can you download the course, or do you have to watch them online? I believe you have to watch them online. I don't think they're downloadable. I took the low-risk, high-reward trades for a higher price. This is a steal. VK, thank you very much. I appreciate that. Is it the methodical nature of the bonds that allows the success on an overnight trade, or would it work in any market only if you stop yourself from looking? Terry, that's a good question. So the gold market is actually pretty explosive. And I do a trade in my favorite trades where I risk $600 to make $6,000, and the gold market is very, very trendy, but it's a breakout market. So, and the reason it works is because I'm not looking at it also too. Hubert is great. I recommend his course. Thank you, Michael. I appreciate it. Thank you very much. David, send them to me if you don't have time to watch them. That's funny. Nice to hear such positive comments. Yeah, thank you very much. I really do appreciate it. Thank you. I keep that in mind. So yeah, I mean that's good. That means that what that shows is people that are taking the courses actually like them, and what it also shows is what you can glean from that is I'm probably giving them really good value, right? So that's how my mom and dad raised me, is to give more than you take or that you ask for, add a lot of value to other people's lives, and you'll just make a lot more money. So that's just how it works. Can you download the course, or do you have to watch them online? You have to watch them online. Unfortunately, they're not downloadable that I know of. My husband and trade partner just signed us up. Thanks. Sue, thank you very much. I appreciate it. Sorry, I'd missed the answer. Do these work well in the Forex market? Yes. The Ichimoku Cloud Charting Secrets course will help you immensely in your Forex trades. I mean immensely. It's a wonderful way to trade. Ichimoku and Forex is a winning combination. You got to give it a try. I need the Ichimoku class. Is it sold separately? How much is that? It is included, Greg, in the course. So if you bought the Ichimoku course by itself, it would be $197, which if you want to do that, I will do that because I'm a trader. If we want to spread the bid ask, I'll do it. But why don't you just buy it for $97 and get it as part of the course? It's a much better deal. What is Ichimoku? Well, it's a Japanese charting methodology. It's a lot like candlesticks, okay? And it's called At a Glance. At a Glance. So let's do this. Let's take a look. So look, go to hubertcenters.com/learn. hubertcenters.com/learn. Here, I'm going to give you the link one more time so you can see it. You also call my office, area code 859-963-3445. Let's do some trading. Let's quit selling stuff and trade some stuff. You want to? So I'm going to show you what Ichimoku Cloud is first, okay? So this is Ichimoku AAPL. You know what? Just give me a random anything, and I'll chart it for you, and I'll show you how powerful Ichimoku is. Give me something random.
Expiration date.
Facebook, okay. FB, first one, Facebook. All right, so this is how Ichimoku looks on Facebook. So the phone's ringing off the hook. I really do appreciate y'all placing the orders. It means a lot to me. Thank you very much. So this is what it looks like. So on Facebook, do you see where the price action here? You see this price action right here? Where you see this right here that I've got circled where the candlestick went above this cloud? That means at that time, Facebook is bullish. Also, do you see where this lagging line went above the cloud? That means Facebook is bullish. Yes, it gapped up, but it also had 1, 2, 3 days. 3 days above the cloud with a lagging line above the cloud means that you may get this type of stuff. So if you don't like that example, give me another one. Give me one more example. Your pick, not mine. Just Apple. Awesome. AAPL. So what we're going to do is I'm going to go through here. So look at this. So let me get my pencil because my pencil's better at this than me trying to mouse it up here. Okay. Notice here in 2012 where Apple got above this cloud. Do you see this? And do you see where this lagging line got above this cloud? So then what happened? Apple went parabolic, and then it slammed into the cloud. You buy it here, you buy it here, and you buy it here. Okay? And then it bounces out of here. You buy it here, you buy it here, and it bounces. Now, watch what happens here. You buy it here, you buy it here. Oh, man, this one sucked. You got stopped out. Okay, so now we're going to start from here where it finally broke through the cloud. You see where it broke through the cloud? So you finally, that's a bad trade when it goes below here. So now what you're looking at here on the cloud on Ichimoku is you spent 3 days below the cloud. The lagging line's below the cloud, and now you short every rally. Short this, short this, short this, short this, short this. Now, check out what Apple's doing now. Apple's a little crazy right now, but it's still valid. Now, look what Apple did here. Apple went above the cloud. Daggone pin's not working right. Apple went above the cloud here. Lagging line above. So now Apple's in a new uptrend. Slammed into the cloud. You buy that, and it bounces higher. Your cloud is a little hard to see. Yeah, it's probably because it's you just can't see it because of Omnovia. But what I can do is I could zoom it up like this. I could probably do this. Is that prettier? So that's how it works. Let's go do a bond trade. All right. So first, let's take a look at the bond market. We're going at US. So which way would you have this bond market going? Is the bond market in an up or a downtrend? Up or downtrend? It's in a major downtrend, but a minor uptrend. Do you see this right here? So it's in a minor uptrend, right? It is in a major downtrend, and it's in the cloud. But we're in a minor uptrend right here. So what we want to do is we want to buy the minor pullbacks, okay? Long-term downtrend, short-term bounce. So we're going to play the long side, okay? So we're going to go over here to the Trade It tab, and this is the 30-year. So this is the USZ13. Does everybody see that? So what I want to do is this is where this opens up. So the market opened up. I'm going to let me remove my special indicator because I got an indicator that just draws this for me. So this is where the market opens up. Do you see this? Actually, let me show you what the market did earlier. Now this is a 1 minute chart, and you're sitting there going, man, that market looks thin. It's huge. It's very thick, very, very thick. It's not past the cloud yet, right? Because it's going in between the cloud. So you can see that this market bounced up a little bit. It ended up being down 8 ticks. So what I want to do is, if I think we're in a major downtrend but a minor uptrend, I'm going to try to get long tonight, okay? Because the minor uptrend still has a little bit of bounce with it. So what I'm going to do is I want to buy after we saw this low here. Do you see this high here? I mean the high. So that's going to be my high water mark, which is right here. Do you see that? And I might be able to do it better with a 5 minute candle with you. Let me see. Does that show it better for you? See how they're so methodical? They trade sideways a lot. So this is my high point. So what I want to do is I want to draw a high from here, and I want to do a retracement of 8 ticks. So in TradeStation, I just go this. I go like that right there. So in TradeStation, I know that if I put a bid in here at 132 and 26/30, that's where I want to buy the bonds because I built the indicator for myself. And everybody that's a member of my membership site gets a copy of it. So 132 and 2/32, then what you do is you subtract 8 ticks, and that gives you 132 and 26/30. Does it make sense? Hubert, I ordered the online and received an invoice, but I have no idea how to log in and access the videos. Could you please talk about that? Thank you. Susie, what you'll do is you'll get an email confirmation, and you'll get a resource link. You click that resource link, and there's a password to get in. If you have Susie, if you have any problems whatsoever, all you do is you just email us support@hubertcenters.com. Support@hubertcenters.com. You can also call the support telephone number, area code 859-963-3445. I'm not going anywhere, and I'll make sure that they take care of you. Now, there's a lot of orders coming in, so it may not be until first thing in the morning, but they'll definitely take care of you. So does everybody understand this trade that I'm about to do here? Why I'm going to buy an 8 tick reversal at this blue line. Do you see this? Can we sign up on the website only? My favorite trades show 97 does not include Ichimoku course, or do we need? No, you don't have to do anything. If you order through the link that I gave you, if you order through the link that I just gave you right here, if you order that right there, you be just fine. Just do that right there. Order through that link, and it's already uploaded as a bonus. So I'm going to go over here and put an order in at 132 and 26/30. So here's how this order looks like, okay? So I'm going to risk 5 ticks. See this? I'm going to risk 5 ticks to make 32. Okay? Now, if I didn't have my special little indicator that calculated 8 ticks for me, you can also just calculate it off of the high. So you see where this is the high? So 132 was 133 and 2/30 seconds. Then I just go 1, 2, 3, 4, 5, 6, 7, 8. And I come over here and I buy one. You see how that works? So I'm risking 5 ticks to make 32 ticks. It all happens at once. What's the high of the day? The high of the overnight session is 133 and 2/30 seconds. Do you see that on the right? So what I do is when I place this order to buy at 132 and 26/30 seconds, there's already 552 orders pending. As soon as I get a fill, it's going to send my limit order to get out and my stop order to also get out. You got it, Art? So it does it all at once. What charting software will I need? Frank, you can use whatever charting software you want. I don't really care. I use TradeStation. I use eSignal. I use TOS. I use a lot of them. I prefer TradeStation just because I've been using it for years and years, but you can use whatever you want. The strategies that I show you are universal across a lot of different platforms. You're welcome. Can you use bar chart? Yeah. You know what? Bar charts actually has a pretty good little scanner for Ichimoku. So it's going to be a really good complement to your Ichimoku course. Those are OCOs. Yes, those are OSOs, not OCOs. TradeStation calls them OSOs. So basically what it's saying is it's going to place a 5-tick stop market order, and my target is going to be a limit order of 32 ticks. Yes, you are correct. All right, so any other questions? So that's my pending order. Hopefully I will get filled. All right. Now let me show you a 10-year note trade. So a 10-year note trade, we'll do this 10-year note trade. I want to show you how quick it is. I'm going to use the same type of ticks and start. So if you wanted to get along the 10-year note, you just go like this. Watch. Watch how quick this is. I'm long. I'm long one right now. And I'm going to risk 6 ticks, $93.75. So if you've never traded the bond market and you're like, man, look how many people are, 1,439 contracts. 154. It's very thick. Very thick. Very, very thick. How do you trail? Good question, Randy. So if you're doing this trade and you're long right now like I am, what you can do is on a 5-minute or a 2-minute chart, add a parabolic SAR. Come down here and go parabolic SAR. You want to make it so you can see the daggone thing. Okay, I'll make it that big. And then you could trail this stop. So we're going to change it to a 2. So then what you would do is once you're up about 3 or 4 ticks, this dot is going to change from high side to low side. And you could just trail the stop like this. If you're long here, you stay in long, 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 and then boom, it pops you out. So a great way to trail stops on the bond market or anything else. Tonight was worth $97. Thank you, Wayne. That means a lot. Thank you very much. But Randy, that's a great way to trail. Just make sure you don't trail it so tight that you choke it out, okay? Never used it. Never used this. Do you teach how to set up OSO on TradeStation? Yeah, SK, if you need help on OSO, it's not a big deal. I'll definitely show you how to do it. It's not a big deal. What is the dot indicator? MAR-B, the dot indicator is a proprietary algorithm that I will sell to you for $997. Or what you could do is you could just use a parabolic SAR, which is on every platform known to man. It's just called a parabolic SAR. Parabolic SAR or PAR SAR. That's all it is. It's a great little trailing stop indicator. You should definitely use it. Great program as always. Thank you, Jim. I appreciate it. So I'm going to flip back here to my slides and answer questions, and then we're going to get out of here. All right. So you go to hubertcenters.com/learn to order. Okay. Thanks. Always great. Thank you. Appreciate it. You can also call the office, area code 859-963-3445. This was recorded after the first 100 spots are taken. What we'll do is we'll take down that order page and we'll just change the price back to a higher dollar amount so that you can't order it. But any other questions before I leave? Why did you get long the TY Is that also an 8-tick bounce? No. LG for the TY, I was just showing people how easy it is to get in and out of the bond market. Is all I was doing. The 30-year, I'm actually waiting for an 8-tick trade. Yeah. Great stuff. Thank you. Thank you, Steve. I ordered 20 minutes ago. Haven't received my email. Brad, we'll get it to you. What happened is right now is there's so many people ordering that the email server gets a little slow. So you'll get your confirmation and check your email. There'll be a resource page that you just click on it, and then you'll be able to have access to it. So we'll take care of you. How does your system work with stocks? Ichimoku works great with stocks. I've got some really cool gap strategies for stocks and earning trades for stocks. Should I switch from trading stocks to futures? Depends. Are you making any money trading stocks? Yes or no? If you're making money trading stocks, stick with stocks. What you should have is you should have a small futures account to hedge your stock positions is what you should start out with before you go, hog wild and just get into the futures business. You're welcome. We got an email and we look at the videos when we're done. Yep. Thank you very much, Phil. I appreciate it. Any live seminars scheduled? David, at this time, I don't have any live seminars scheduled, but I need to put some on the calendar. I think stocks should be covered with a put. You could do that too, but you could also hedge it with a future. Always good. Could my husband access the online videos and trading room to log in from 2 different places at the same time? I think I'm not sure how it allows you to do that. You'd have to call the office. I mean, if it's at 2 different locations, I don't know how we treat the IP thing. You can try it and see how it works. If you have problems, you can call us. Hubert, do you still send out daily free trading videos the way you did at Trade the Markets? I sure do. If you go to hubertcenters.com, I send out daily trading videos every single day, Monday through Friday. Now, I'm getting ready right now. I got to jump on a plane at 4 in the morning. I'm going to go spend 4 or 5 days over in Haiti, and I'll be back next Tuesday. But what I'm doing, as soon as I get done with you here tonight, I'll be recording 15 videos and putting them in queue, and they'll be going out to the members and the non-members. So as soon as I get done here, I've got to record, I think, 15 more videos to cover for the weekend and for next week. But yeah, going over to Haiti, I do some work over there where I feed 2 schools, feed and water them and stuff like that, and we raise some money. So we're just going over there to help those folks. So yeah. Thank you. I watch your free videos religiously. Thank you very much. I appreciate it. Do I have a tape reading course? I don't have one at hubertcenters.com yet, but I will be launching one. What do you add to your caffeine? That's funny. Bourbon, usually. Bourbon. Add a little Woodford Reserve to my caffeine. Helps out a little bit. We'll be waiting for it. Thank you very much, Gary. I appreciate it. All right, gang, I'm out of here. I appreciate you letting me go long. Sorry I went so long. Hopefully it was worth your wait, okay? Why the $7 charge per month? No, James, that's if you want to favorite bourbon. You know what? Woodford Reserve is distilled 6 miles from my house here in Versailles, so I'm a big fan of them. The $7 per month, James, is if you want to try my membership site where you get free trading videos, or you get a member video, you get discount on indicators, you get a live trading room, and you get my trade alerts. That's a different service. So what I do is I make you a trial offer when you buy one of these courses. I go, hey, try my trading room for $7 for 30 days, and if you like it, keep it, and if you don't, not a big deal. So yeah, it's normal $97. Yep. Just call the office. Just call the office, and they'll take care of you. Can I do just the trading room trial? You might be able to if you call the office or send an email to support at Hubert Centers. You aren't with Trade the Markets. I'm still a owner of Trade the Markets and a stockholder. I just don't put any content over at Trade the Markets anymore. I'm focusing on my own personal brand, hubertcenters.com. But yeah, I'm one of the original founders of Trade the Markets, and I'm still an owner and a stockholder of Trade the Markets. I just don't work over there much anymore. Yep. I did that gig over there for, I don't know, going on 12 years, and I just wanted to kind of branch off and do my own thing. All right. Thank you very much. It was Trade the Markets course I did. Oh, cool, Ellen. Thanks. Appreciate it. All right, I'm out of here. Thank you very much. Thanks for having me. I know Steve's gone because he had to go get some medicine. I appreciate it. Becky, thanks for all your help. Good luck. Hope it helps. And I'll see you guys on the next webinar. Here's the link. Have a great week, and I'll see you on the videos.